Good morning, traders. Welcome to the TMT Traders Edge Report for Thursday, January 4th. All right, guys, so we have another day up, another big day up, actually. We hit all-time highs, Dow, NASDAQ, S&P. We are at, I think, a high of 27.14 and a quarter in the ES last night, just before the market closed. And where do we go from here, right? I mean, everybody's bullish the market, actually too bullish the market. You have to be some sort of a contrarian. We've been talking about that. We believe that the markets have topped or is in a formation of topping. And just because you make marginal highs, that does not mean the markets are in a topping phase. Why? There's many assets, phases to the phase of a market top, if you will. So we're on our last and final blowout stage, and that's the one that you really have to gauge is going to be a little difficult, is that last stage, because it can happen longer than anyone can anticipate. But I want to show you, and I want to also clarify that where we are in the market, where we feel that the market will correct relatively in a short period of time, we also need to understand that the type of trader that we are, right? So if we're a lot of TMT subscribers are investors and, of course, day traders. So there's two caveats to what we're talking about. One really more applies to the longer-term investor, the guy who's building positions and adding to their accounts. And you don't want to add to your account here or build any new positions when PEs are through the roof, we're overbought, and we haven't had a pullback in 10 years. And we are going into a 10-year, fully matured bull market. Okay, so for that matter, let me go ahead and let me introduce you to what you see here. This is from JP Morgan Quantitative Desk, and it basically tells you that the world is fully invested. We have margin debt, which I'm going to show you a chart at 100%. It's at its highest that it's ever been calculated. U.S. households, which are the passive investor, at 94%. It's actually more, because this was about a few weeks ago, and especially the last couple of days where we had over $1 billion to buy on the close. This is growing closer to 100%, where the U.S. households are now taking their money out of mutual funds and doing it themselves. So the passive investor has of late been buying the market themselves without using a manager because it's so easy to do. Big red flag. U.S. mutual funds, 98%. Pension funds, which is higher now, probably closer to 92%. Sovereign wealth funds around the world are fully vested, 100%. Systematic strategies, algorithms, 100%. All hedge funds, 98%. Equity hedge funds, 93%, which is more like 96% now. This is insane. Insane. So this is why I'm trying to tell you, just be very careful. You know, we bring you bar none analysis where we have no bias to the long side and or the short side. I personally, and we don't really care if the market goes to 3,000 in the S&P. We just buy dips, continue to buy dips until it doesn't work as an intraday trade. Now, as much as I'd love to buy the market, I'm staying away, and I have stayed away for the last year building any type of positions. Now, if you're going to look to short the market, make sure you have a large size account and make sure you dollar cost averaging based on the dollar amount you want to invest on the short side. Okay, and also have your stops in place. Okay, but that's also, you need a lot of money, and many people, many traders don't have that kind of money to dollar cost average. So just you stick to your trading plan, but I just want to show you what I'm saying is that there are a lot of big warning signs based on our model where we're not calling the top yet. We are not, but we're very close to. If not, there is a top. There may be a top in place already, but we're just not there yet based on our model. So I just want to show you this. Be very careful out there. This is, I've seen this before, doing this 30 years. This actually, when this thing happens and margin debt becomes through the roof, and this is what you can see here, highest it's ever been. Here's the recession of 2001 and, of course, 2009 going into 8 and 9. All right, and then we have the S&P, and here's the New York Stock Exchange margin debt. It's through the roof. That means everybody's borrowing money to buy stocks. What happens when the market goes down and you get a call? Basically, what happens is that you get a margin call, you're selling at the lows, which is going to amplify the selling. So just be very, very careful out there. That's all I'm saying. I'm not trying to scare anybody. What I'm saying is that I've seen this before, and it's going to happen. The faster as it goes up, it goes down 2 times faster. So all of this big move up is going to be wiped out in a matter of weeks and months. Let's get right to it. Just want to show you where we are. This area here, this area of 268, 260, let's call it 269, that's going to be your next area of resistance. That's that little small gap up. Pay attention to that. Also the 21 EMA. We are in an uptrend, so what do? We buy pullbacks. Bottom line, pick a spot based on your trading plan and buy a pullback. We have our value areas just like we have here on a daily chart, on our intraday chart for our subscribers, where you can trade off of. Here's the transports. This is deemed our leaders. So what does this tell us? Well, we got nice volume coming in twice, and we're in an uptrend. So we're making higher highs and higher lows. We got bullish symmetry. So that tells me we look to what? We look to buy the market. This is our leader. So if the leader is leading now, finally, it really hasn't all of 2017. You can see we went kind of sideways. We actually called a small head and shoulders pattern here in the beginning of October for our subscribers. And all of a sudden, now we broke out 3 days in a row just to get up to this point to actually make higher highs and higher lows in a flagging formation. So and until this changes, guys, you got to buy the dip, and you got to continue to buy the. Do not short the market. Bottom line. Here's CF. Doing fantastic, actually pausing now above another area of support where we consolidate. I think this needs to base a little bit more now again, and then we're off to the races again. We just got to break out of this little supply area here, and we should be up to 45.06 unless obviously something happens with the market. But most importantly, and I got a bunch of emails, hats off to you guys. OIH, big move up based on the bombing that happened. So a lot of market participants are saying, hey, oil disruption out in the Middle East, let's buy the oil services sector. So looking fantastic. Just pay attention to these two areas here. There are going to be resistance, but like I said here when I identified it last week before the new year was over, before the year was over, I said our target's going to be these two areas. So looking really good. We have our targets met, targets initiated right up in here. Pay attention to that. Even if we were to, if you did buy it on the break, just trail your stops, because usually what happens when you get the breakdown, you usually back test the support area and then we go even higher. So the first breakout, I like to trail real quick, let it come back in again, make a higher low from this previous low, and then we should be off to the races taking out these two areas of resistance. So just keep that in mind going forward. And again, of course, follow your trading plan. That's what you guys do best. I just want to give you some great ideas here. We'll keep coming at you as the market starts to really get good, and I think that the market for 2018 is going to be fantastic. Long and or short, the volatility is going to pick up. And speaking of volatility, we had an 8 handle in the VIX. That's crazy for anybody not wanting to buy protection on your long portfolio. Just keep that in mind going forward. Have a great day, everybody. Be safe out there.